Hey, not so bad on yesterday's list, eh? Gave you a list of stocks that we liked yesterday, and we're looking for a noon swoon to pick them up at great prices. What is a noon swoon, you ask? That's when the market sells off in the middle of the day, only to rally into the close on higher prices. It's what we used to get back when we were in full-on bull market mode in 2009. We haven't seen much of the old noon swoon yesterday, so it was nice to get something that looked like it back. Our other reasons for telling you to buy around 2 p.m. is that this market has given up many a rally that it started the day with. So even if you didn't grab what you want on the low of the day, or LOD for you Twitter slangers, then you also have bought on the highs of the day, HOD, which often ends up being in the first hour or so of trading. So, just a reminder of what was on the list. Chevron, CVX, Total, TOT, Bank of America, BAC, Chesapeake, CHK, Toronto Dominion, TD. All of those names are up over 1% today, which CHK probably being the best of those names. See, this is why we don't panic being short 2119 CHK put spreads for July. Every day the theta, that stands for time decay, or what the option loses each day that it gets closer to expiring. Theta will eat away at those call spreads we're short, and now that they're out of the money, the trade is starting to go our way. Okay, we actually did a little bit of buying today. Here's how we did it. It's been a hard buy on the down days, so even though it's always better to buy a stock lower because the declines since 1200 in the S&P have just felt horrible with all the mega bears coming on TV calling for Dow 1000, should have seen that for a bottom rather than a top. Doug Cass has been excellent about this, by the way, someone to keep an eye on for sure, as he's been able to call the bottom in 2009, the top in 2010, and he's at it again for the bottom again in 2010. Back to the strategy. Take Cisco, for example. Our cost basis on CSCO is unfortunately higher than it currently trades, much higher. When it comes to owning a stock, you only care about where it's going, either up or down. If you're holding a stock, then you have to presume that you personally believe it will go higher, and hopefully for some reason. If you don't think that it will go higher, then you need to start selling at the money calls against it so that you can at least make money with the position on the way down. Otherwise, if you're taking a loss on a name and you want to continue to hold it, you can bring down your cost basis by adding shares now that they are much lower. Cisco is down 15% from where we bought it, so we're adding to it to bring our cost basis down. The market continues to give you a price under $22. You keep accumulating CSCO there. Eventually, you'll overwhelm your original cost, and it'll be much easier for you to get out of the position for profit, as you should be in the green before you even get back to your original cost basis. This is Jim Cramer's buying in wide scales discipline, where you buy a stock in bigger chunks on the way down. That's why it's important to always keep some cash and never buy your full position at once. If you're a trader, this is a lot harder, and we actually can't really help you with discipline for trading. You need to go to an Invest Like a Monster conference and talk with Guy, Pete, or John personally to get some discipline on how to trade. For us, we like to build a position, invest. We only trade around our position when the market gives us something that we like. So look through your portfolio and find out what you really want to own over the course of a few years. If you're looking at a better than 15% loss, consider adding to your position a little at a time to bring down that cost basis. Don't go and get crazy and use all your cash, but you'll be happy when the cost basis of your position comes down, and it's not so hard to get out of when the market goes back up. Thanks for tuning in again today. Hope you grabbed one of our CCTTB names yesterday. That's Chesapeake, Chevron, Total, Toronto Dominion, and Bank of America. Look, it ain't candies because we don't have any vowels. We'll look to see if we can find some names we like to add some vowels in there and make some catchy acronym. We just don't have the staff that Jim Cramer does. At least you don't need a cable or satellite subscription to check us out. Speaking of checking us out, don't forget to go check out America's Favorite Traders on iTunes or MagnumOpusFinancial.com. We'll see you tomorrow.